Hello, my lovelies, and welcome to Where the Road Rises with me, your host, Eileen Kerlin Walsh. Our topic today is reverse mortgages, and here to educate us on this important financial option for our seniors is Mark Smolenski. Mark is an experienced professional whose entire career has centered around the goal of a better retirement for seniors. Mark developed the reverse mortgage program at Founders Bank in 2004 and has worked tirelessly over the years to educate families on the many opportunities available to seniors, including the reverse mortgage. Mark is a member of the National Reverse Mortgage Lenders Association. He is on the board of directors for our beloved Pathlights, formerly Plows, here in Palos Heights, and was previously president of his Rotary Club. He also volunteers his time with many organizations whose singular aim is to protect seniors from personal and financial abuse. He presents to attorneys, CPAs, financial advisors, real estate professionals, community leaders, and all manner of senior organizations on that vital balance between financial and personal needs in our later decades. And we are delighted he will share his knowledge with us today. Welcome, Mark.
Thank you very much for having me. I really appreciate it. Thank you.
Oh, we are delighted to have you here with us. And why don't we start by telling our viewers what a reverse mortgage is?
Yes, it's commonly known as a HECM or home equity conversion mortgage. So what you're doing is you're accessing the equity in your home and converting it into a loan. And then the loan is there accessible to you by a line of credit or monthly payments.
And that's how it works. Is that correct?
Yes, it's an FHA loan program. So it's not a small company that started it somewhere or is doing it. It is an FHA approved government loan program.
And who qualifies for a reverse mortgage?
Generally speaking, you have to be at least 62. So one of the couples, if you have a married couple and they're 62 years or older, they have to be at least that age, and they could, or the couple could be, one of the spouses could be younger.
Okay, and do they have to meet certain financial eligibility requirements?
They have to be able to basically be able to afford their taxes and their insurance on their home. So if they're, most of the people I've ever worked with only have Social Security as a benefit. And so this helps people, within their home live there if they'd like to age in place.
So does that mean, can they pay their homeowners insurance, their property taxes from the equity they access in their home?
Yes. The whole idea behind the reverse mortgage started in 1961 and it was approved by President Reagan in 1988. And the whole sole purpose is to help someone in retirement to be able to stay in their home. And so the program was literally designed around that to be able to help them provide money for their taxes that they have to pay in their home, their insurance, and maintaining it. So if they need a roof, they have the money to do that.
So if the money is spent down, and as you know, our seniors are living longer, and if they've outlived the retirement, they can access the equity in their home. But they must be able to, if they use up that equity, still maintain the homeowner's insurance, still maintain their property taxes, and maintain the home and, keep it maintained. What if, Mark, they use up all the equity? Do they then have to leave the home, or can they stay on the home until they either leave or pass away?
That's a great question. I do get that question a lot. Yes, the answer is yes. They can stay in their home as long as they want. So if they had $200,000, $300,000 available and they used it for whatever purposes, and so then at that point they ran out of money, they could still stay there. There is no monthly payments required. So the key factor is allowing people to age in place, as I said, because it does allow them to stay there as long as they want until they decide to move or if they pass away.
Yeah, it really is a tremendous option if all other assets have been exhausted, Mark. And I do think it's good for our community to know that this is an option. Many of our seniors want to leave at least the home to their children, but those children will tell us they don't want mom and dad scrimping, saving, not having enough. Most families want their seniors to be able to use up the equity to be able to, as you say, stay in their home and have enough money throughout those later decades. Now, does the borrower still own the home after the reverse mortgage has been put in place?
I'm glad you brought that up. That's like, Mythbusters. This is the number one question that I have people ask me is, do I still own my home? And the answer is yes. You always own your home. You never lose control of the value of your home or the assets or anything that's in there. So it's your home. It stays in your name. It doesn't change. You could also incorporate a title, I should say a living trust, or if you have a land trust, those are acceptable as well.
So it's not going to affect your home being in the trust, which would
Correct.
absolutely. And then what if you wanted to downsize? Would it be possible to move maybe from a single family to a condo? And as long as you still had the equity to purchase, could you then still keep accessing your equity, or would you start all over again? Pay it off and start over again?
Well, there's two ways of looking at it. If they are living in their home and they have access to their equity, that is fine. You can sell the home and move and downsize. That is fine. The other part is you can use the reverse mortgage to purchase a home. So if you don't have a reverse mortgage today and you say, well, I want to move next to my kids. So that's what they want to do. They want to age in place. They want to live next door. I literally did a loan for a lady next to their daughter. It was really rewarding because it was so nice to be able to luckily find a house next door, and they used a reverse mortgage to purchase that home. So you can do that as well.
Oh, that's interesting, and I didn't think of that. So with the reverse mortgage in place, what if the homeowner passes away? Or what if they're still living but they want to move? So that kind of answers that question, that they do have the option to move. And so if they stay there to the end of their life, either with equity or having used up the equity and continuing to maintain their homeowner's insurance and their property taxes upon their passing, what's the next step?
Well, the next step would be is that if they do decide to move, there's two things. One is that the reverse mortgage has pros and cons to everything. There's pros and cons. And the pros to reverse mortgage is no monthly payment. The con is that it only gives you maybe 50 or 60% based on your age of the value of the house. So simple numbers, if the house is worth $100,000, we're only able to give them $50,000 or $60,000 if it was $100,000. So with that being said, there's always that extra equity that's built into it. And then we forget about the value of the home going up over time. The loan will continue to go up, but the value of the home usually exceeds that. So there's usually generally equity left in the home when they leave. Whether that's to buy a house next to their kids or wherever, or move to a warm, sunny place, or if they decide to downsize.
Okay. And if they pass away, then the trust, let's say it's a nice responsible homeowner who has their home in a trust, what would be the steps be for the trustee what would the steps be with regard to the reverse mortgage on the title to the property after the homeowner passes away?
There is no difference in that of any other loan. So we all had a 30-year fixed mortgage at one time, and if it was in trust, it's all set up the same way. Whether it's an FHA reverse mortgage, an FHA, or a regular conventional loan, it's all the same. So when they leave the home gets to convert it into the trust, which you well know, and then from that they dispose of the home and or the assets.
And they just pay off the reverse mortgage?
Yep,
get a
just
payoff,
like
like a regular closing where we get a payoff for the loan so that we can sell the property.
Exactly.
Okay, now, having spent many years paying off our homes, and we have that wonderful day, remember when we used to burn the mortgage and be so excited that the home was paid off. So there's going to be some anxiety putting a reverse mortgage back in place. As you say, there's pros and cons. Is it possible for the homeowner to lose the property while they're still living if they have a reverse mortgage?
Well, let's put it this way. Everybody has to pay real estate taxes. So the number one thing that gave reverse mortgages a bad eye is that a lender would take the house. It's 99% of the time is because they didn't pay their real estate taxes. So if anybody owns a home free and clear or with a loan, if you don't pay your real estate taxes, you could lose your home to the tax accountant or tax county.
Yeah.
So that's really the only reason that you may lose your home to an FHA reverse mortgage, because you do have those obligations to continue to pay the real estate taxes, your homeowner's insurance, and maintaining the home.
Yeah, and as we know, it's the bricks and mortar that owe the property taxes. And if the bricks and mortar don't pay the property taxes, the county or the taxpayer is not going to be sensitive to the reverse mortgage or the contract around that. And that's completely separate. But I hear what you're saying, Mark. There can be a perception then that somehow the bank was the bad guy,
Yeah.
when in fact it was really one of the terms was continue to get those property taxes paid or the insurance, and it wasn't paid. Are the proceeds from a reverse mortgage, that those funds, are they taxable? Is it considered income?
It is not considered income because it is a loan. It can't be taxed. So if you receive $200,000 or $300,000 from the reverse mortgage, it is not taxable. You do not have to file it in your income taxes.
Oh, that's excellent. I think that's good news. And what about affecting any of our income? So many seniors are going to be receiving their Social Security, and they're going to be eligible for Medicare. Does this extra funding that now becomes available through the mortgage, does that affect their Social Security or their Medicare?
No, it is not affecting either one of those at all.
And then what about the needs-based Social Security disability or Medicaid to pay for Medicare, to pay for medical care?
Yes, it will affect it because the way Medicaid works, it is designed to have look-backs of access to equity, or I shouldn't say equity, but to their savings and checking and things of that nature. So yes, it does look into it. If you took the reverse mortgage out and took out all the money and put in your bank account, that could affect Medicaid. Yeah. But if it is in the loan, it is not considered income until you take it out. So there is a stipulation that if you leave it in the line of credit under the reverse mortgage program, it is not considered income, and nor is it part of the Medicaid, I should say, situation.
And that's really important. And I think our families, for where Medicaid or Social Security disability is a player in their seniors' world, they're going to have to be very careful about any source of funds coming into the seniors. So just as with always, we would keep those two things in mind if we were taking this route. But that's interesting that while it's in the line and not sitting in our bank account, it's not going to affect those needs-based benefits.
Correct.
What about costs and fees associated with this line of equity?
Okay. Basically, it's a loan. When you bought your first house and you got your 30-year fixed mortgage, you have an appraisal, you have a credit report, you have title searches and things like that, and you have surveys and all that kind of stuff. With a reverse mortgage, there is cost with it. So there's two, when I'm working at a bank, so when we work at a bank, we're very clear on a conventional loan or an FHA loan. Conventional is less expensive. FHA costs more because there's mortgage insurance premiums that are on that loan. So that is the difference between the two different loans, and it does cost a little bit more, but it's not anything that you have to have out of pocket. So when you get a loan or reverse mortgage, you don't have to come up with any of the closing costs.
So it's always FHA because, as you said earlier, it's a federal program, which is part of the security around knowing that it is it's a very safe product to become involved with. But of course, we do have those slightly higher fees. So, Mark, that's terrific information, and I think important for our families to know. And you have been doing this now for many years, the early 2000s, with education around reverse mortgages and dealing with senior organizations and families and protecting them from any kind of senior scams, any kind of financial abuse. So what have you learned about this human condition, about society, about people? How would you sum us up? How are we doing from you being in that field all those years?
Well, like most seniors in retirement, it is a challenge, and we want to make sure that those challenges are safe. And I think it's key to a lot of people to be able to make sure you align yourself with professional people, a real attorney, someone that's experienced in elder law, someone that's experienced in trust, so someone knows what they're talking about. Other things that I think overall, I think that generally speaking, there is a few situations out there that I've encompassed that has been not in the favor of the parents, but I think overall, I think that we've seen a good reason why reverse mortgages are being used. You have to do it for the right reasons and have that conversation. Best it was with the family, so they're aware of it.
Yes.
So that's a key thing to have those conversations, but overall, it's been a very positive situation.
Oh, I love that. And I would agree. Also being deeply steeped in the senior world, that our communities care for our seniors, our families care for our senior is overwhelmingly positive too. I love that, Mark. Could we have a favorite quote or a poem, or is there words that you live by as you go through the world?
Well, you do a lot of things throughout life, and you work with a lot of people, and I always feel that karma is important. I do feel that if you have karma and you do goodwill today, it will return back. I've been doing this a long time, and I've been trying to be an advocate for seniors, working with plows when it was plows, now path lights, and asked to be on the board. I work through a Rotary Club that works with senior programs and things like that. And I just believe that all that good, whether it's me or you or anybody else that does it, I believe it comes back.
Oh, I love that. And I totally agree, Mark, that when we give back bread, it comes back buttered. It's just a wonderful way for us to end our interview. How about telling the viewers, if they want more information about the many things that you do and that you're involved with, including information on reverse mortgages, how would they get a hold of you?
Well, the best way to get a hold of me is my cell phone, which is, you can call or text me or email, but it's the 708-280-1287 is my cell phone. And that's my text. You can text me also. And please include your first name so I know who I'm talking to, so I don't confuse with other people. But that would probably be the best way to reach me.
Lovely. Mark, that has been terrific. Thanks so much for sharing your information.
My pleasure.
Thank you, viewers, for listening. And we will see you next time on Where the Road Rises. Thanks and bye.